Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news the global economic slowdown is coming, but it might not be like every other slowdown. There is more evidence that the giant American economy isn't expanding as fast as previously. First, the National Activity Index released by the Chicago Fed delivered a weakish result for June when it saw little economic growth. And the internationally benchmarked market flash PMI for the US reported a more modest expansion for July. Their service sector is still in a modest expansion, and the factory sector's contraction is now only very minor, which is an improvement for the manufacturing sector, but a slowdown for the servicing sector. However, a strong majority of business economists now say the odds of the US entering a recession in the next 12 months are 50% or less, according to a new survey that was taken in the first half of this month. How does all this square with the steep inversions in bond yields? More professional economists are explaining that the yield curve actually signals a slowdown in inflation that typically accompanies a recession, but not the actual recession itself. Without a weak labour market, they may not actually get a recession this time. It still may come, of course. One indicator is that there has been a flurry of junk bond credit rating downgrades recently. They reached a 3-year high of 120 in the June quarter. Risky debt is getting riskier, and it is a $1.4 trillion market overall in junk bond debt. In Japan, the market PMI recorded a good expansion. Activity at Japanese private sector firms increased for a 7th successive month. Key was a sustained and solid improvement in Japanese service providers, while your manufacturers noted a slightly softer downturn at the start of the third quarter, and their survey found that new order growth slowed rather sharply though. In Australia, business activity in their private sector fell for the first time in 4 months during July, according to their market PMI. This retreat was due to a renewed contraction in their services sector as interest rate rises hit consumer confidence and budgets. More positively, manufacturing output ticked higher and actually recorded only a tiny contraction. The US Treasury 10-year yield will start today at 3.86% and up 2 basis points from this time yesterday. And the price of gold will start today at $1,959 an ounce. That's down a mere $2 from yesterday. And oil prices are up $1.50 at just on $78.50 a barrel in the US, while international Brent price is now $82.50 a barrel. And the Kiwi dollar starts today up a quarter cent at just on 62 US cents. Against the Aussie was slightly firmer at 91.9 Australian cents. Against the euro up a half a cent to 56 euro cents. That all means our trade weighted index has risen to 69.8 and up 30 basis points from this time yesterday. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.